What is mortgage? A mortgage is an agreement between you and a lender that gives the lender the right to take your property if you fail to repay the money you have borrowed plus interest. Mortgage loans are used to buy a home or borrow money against the value of a home you already own. Seven things to look for in a mortgage. Home mortgage will be their easy step of the way to help you buy your home or reference your mortgage. You deserve a loan partner that understands your. In the US, the process by which a mortgage is secured by a borrower is called organization. This involves the borrower submitting a loan application and documentation related to his or her financial history and or credit history to the underwriter, which is typically a bank. USA mortgage apply or reference your mortgage. Completely employ on USA mortgage is driven with a passion to make the mortgage process easy. Apply today and we will find the right loan and rates for us. What is mortgage types? How they work and example. A mortgage is a type of a loan used to purchase or maintain a home, plot of land, or other types of the real estate. The borrower agreed to pay the lender over. What is a collateral? Collateral is a financial word is a valuable asset that a borrower pledge as security for a loan. For example, when a home buyer obtains a mortgage, the home serves as the collateral for the loan. For a car loan, the vehicle is a collateral. A business that obtains financing from a bank may pledge valuable equipments or a real estate owned by the business or as a collateral for the loan. In the event of a default, the lender can seize the collateral and sell it to recoup the loan. Other non-specific personal loans can be collateralized by other assets. For instance, a secured credit card may be secured by a cash deposit for the same amount of the credit limit $500 for a $500 credit limit. Key takeaways: collateral is an item of a value pledged to secure a loan. Collateral reduces this risk for the lender. If a borrower defaults on the loan, the lender can seize the collateral and sell it to the recoup its losses. Mortgage and car loans are two type of a collateralized loan. Other personal asset such as a saving or investment account can be used to secure a collateralized personal loan. How to collateral work? Before a lender issue you a loan, it wants to know that you have the ability to repay it from the repaid. That's why many of them require some from the from a security. The security is called collateral, which minimize the risk for the lender by ensuring that the borrower keep up with their financial obligation. The borrower has a reason to they repay the loan on time, because if they default that they stand to lose their home or other assets pledged or as collateral. Loans secured by collateral are typically available at some lower insert claim to a borrower. Collateral is called a legal right of claim against as asset to satisfy a debt. In the event that the borrower does default, the lender can seize the collateral and sell it, applying the money it's get to the unpaid portion of the loan. The lender can choose to pursue legal action against the borrower to recoup any remaining balance. Type of collateral. The nature of the collateral is often permitted by the loan type. When you take out a mortgage, your home becomes a collateral. If you take out a car loan, then the car is the collateral for the loan. The type of collateral that lend commonly accept, including car, only if they are paid off in full. Bank saving deposits and investment accounts, retirement accounts are not really accepted as collateral. You also may use future paychecks as collateral for a very short term loan and not just for payday lenders. The traditional banks offer such loans usually for term no longer than a couple of weeks. These short term loans are on an option in a genuine emergency, but even they even then you should read the fine print carefully and compare rates. Collateralized personal loan. And other type of borrowing is the collateralized personal loan in which the borrower offers an item of a value as security for a loan. The value of the collateral must meet or exceed the amount being loaned. If you are considering a collateralized personal loan, your best choice for a lender is probably a financial institution that you already do business with, especially if your collateral is your saving account. If you already have a relationship with the bank, that bank would be more inclined to approve the loan and you are more apt to get a decent rate for it. Important. Use a financial institution with which you already have a relationship if you are considering a collateralized personal loan. Example of a collateral loans: resident mortgage. A mortgage is a loan in which the house is the collateral. If the homeowner stop paying the mortgage for at least 120 days, the server can be legal proceeding which can lead to the lender eventually taking possession of the house, though for clear. Once the property is transferred to the lender, it can be sold to repay the remaining principal on the loan. Home equity loan. A home may also function as collateral on the second mortgage or a home equity line of a credit. In the case, the amount of the loan will not exceed the available equity. For example, if a home is valued at 2 lakh dollar and $125,000 remain on the primary mortgage, a second mortgage of a HELOC will be available only for such as a $75,000.